tryna take it down, place for you just scoring minds, best of bar.
All right, ladies and gentlemen, I got your watch list coming into January 14th, 2020, and we have a lot to talk about. I want to go over the Beyond Meat play. We've been talking about it since yesterday and last week. We made that play on Thursday. It went $80 to $1,000 today. We ghetto spreaded it, have that max gain of $2,000. I want to talk about that because that is going to lead into other plays I want to discuss, as well as the strategy. The next thing we need to go over is the market getting ready for earnings, the earnings we're getting this week, and then general strategy of how to go about playing it with, either debit spreads or going naked, and then some of the plays that we made today. So there's a lot we're going to go over. We got the plays and everything else and a few other plays to watch. I have a few. Again, this is what I wanted to elaborate on the watch list yesterday. So I'm excited to go over that, and I hope you guys are ready, baby. 2020 is coming off to a great start. Shout out all the long-term accounts. Shout out the people hitting the option trades, the ghetto spread. Shout out to Cole, baby. I love you all. So let's get right into it. But before we do that, you guys know what you need to do. Make sure you guys drop your thumbs up on the video. Make sure you're subscribing. If you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning, baby. Come source that information. It's free 99. We did all of these plays live, including the Beyond Meat, so there's no reason not to be there. All we ask is that you're positive and respectful. Shout out to Cole. I'm really excited, but don't forget the most important thing you need to do. Post your watch list below. Let us know what you guys are looking at. Post those plays. If you guys have earnings ideas, that's why I love the Colt, because some of you guys just come out of nowhere and you call out some of these crazy earnings plays coming up, some of the obscure names, those not name brand ones, and even the name brand ones. So post those plays and share them, baby. So let's go. So right off the bat, as far as the keys are concerned coming in today, and I guess if you are interested in what happened today, it was just the overall melt up. We didn't see, the Iranian protests, some of that. We didn't really see any of that effect. The market melted up. We're setting up for the bank earnings. All is well in the land of stock world. More all-time highs, and it's even going up after hours. A lot of crazy moves, but still, I think Iran is still a concern. So the defense stocks are still creeping up. I want to show you guys one of the plays, NOC, and we even talked about averaging down on that, and that has to do even with strategy, but I still think this is in play, but watch the digestion time and how this is going to play out. So that's the first thing that's important. The next thing, stocks are going to start getting in their earnings mode. So even today, we did see tech really kind of lead the way, but even in there was laggers and leaders. And again, we also saw healthcare sell off. That's actually an industry I want to be watching coming into tomorrow. And even then, they have some of the earnings coming up. But you're going to start seeing these companies get into that earnings mode, but it kind of comes out of nowhere depending on the date. But they all are going to move as one, kind of going off in tiers, but they are all going to move up to the same point. So really what I'm saying is they're going to move in packs, baby. It's like watching the frogs in the wallabies. You got to stay hunting. They're going to move as a pack before you know it. They're all going to stay the same. Then one's going to get, then the lagger and the leader. But essentially just keep your eye out for it. I guess a good example would probably be NVIDIA, I believe, because I'm trying to see their last earnings report was around 11/22, but before they started moving, again, there was a lot of earnings happening in that October. So as these companies hit, they were coming here getting in earnings mode. They started coming up with the market, and then before you knew it, the market and the earnings were out. But then by the time they reported, they were already up. So this is what I'm saying. They're going to move in pack. Each tier of the move is going to contain some of the companies. And again, it all depends on what the market does and how some of these companies report. So watch out for all those companies and how this is going to move coming into earnings. But again, just pay attention to how they move in packs. Then lastly, this is as we get into the plays. I did a play on this today. We did a Roku play. And again, I think they're going to be one of those, the rotation breakouts, and we've been seeing what happened with Tesla and beyond, but there was a few different things that we needed to go over, but you got to kind of understand now, even setting up into earnings and then playing some of these crazy momentum gains and how they're moving, understand the key with debit spreads. I want you guys to pay attention to how debit spreads both cap the gains, but make it more likely to hit. And again, if you go on a naked trade, you're going to get more upside. So this even is how we scaled into one of the plays today. I'll go over it when we look at the Roku, but keep this in mind why I chose to go naked on some and why we chose to do debit spreads. And another great example of all this is the Beyond. So here's that first play that we did. Remember, we did this one play. This was the weekly. This was further out of the money. We did this on January 9th. We bought 4 of these for 80 cents. You see they're worth $1,000 right now. Beyond went crazy, but that's a 130 call. That was just by itself, and then we did the ghetto spread later. But now here's the next one. This was a debit spread. We got more time, but I got $30 closer to the money, but we're only turning 45 to 270. So it's still not too bad, but understand the difference where, again, the gains are capped. And then this is the last part I wanted to talk about, and we talked about it today, is understanding how the debit spreads profit. So I guess since we're on the topic, this is what I had to explain on stream today because some people were confused because now BYND is like literally trading at like 121 right now, and this is a 105, 110. So the key is now we hit our max gain, but this should be a $5 max, but it's only worth 270. That's what happens because we bought the 105, but then we also sold this 110. So the fact is, since there's time on the contract and it's in the money, this contract has both intrinsic value and this one has intrinsic value, but the fact is this still has a value that's taking away from some of our gains. So we need theta to work. And I talked about it, really what is the best case scenario? And this is one of the keys. I think this kind of helps wrap it up and summarize it, is understanding that the best case scenario on a debit spread would actually be if you got assigned on this call. Because if you get assigned, when someone chooses to assign the contract, remember, they already paid the fee. So you would give them the shares at 110. So then this contract would lose its value. So then if this is a 105, has over $13 intrinsic value, then they exercise this. You are not liable to pay back this 1080. So then you have the 1350. You would pay whatever remaining equity on here, but then you would keep the difference, that max gain of 105. You actually might even make a little bit more because, again, it's super far in the money. So that being said, the key is kind of holding it here. The further BYND goes up, so it made, another like $5, $6 after our move. The further it goes up, the closer you will get to max gain. So again, on a debit spread, you have a better chance of hitting max gain near expiration. If there is a debit spread and you hit it and there's still time, you run into this issue here where your contract still goes up, but it's not going to hit that max gain. The question you have to decide is now, by this time frame, is it going to stay above this price? And then even the price it's not now, that's why I said even factor in the break even, or is it going to come down below there? Then you would lose. Or if it went above 110, then at expiration, if they both end in the money and you have to exercise both, then you would walk away with the max gain. So again, in this case, we just pretty much, you have to understand, you need the other call to sell. How you make the most money is this one having not as much value as this one. But again, if they both are going up, the stock's going crazy and this holds value, that's going to be the difference. But one thing you guys will notice with BYND, if you have this trade, when BYND starts making a move down, as long as it moves down, it doesn't go below 105, this contract will start to depreciate faster. So if this one stays in the money, you'll see this value actually go and increase. But again, your gains are capped. So taking profit right here wouldn't really be too bad, considering there's only $130 left or $230 left. So you can make 50% more. It's really up to you. But again, $45. Again, it allowed us a very, very high probability play. We're really deep in the money. Taking 270, not too shabby. So we got that out the way, I guess. Let us get into the plays. I want to talk more about the BYND, and I'm going to come back to this point here with understanding when to do the debit spreads or not, or at least kind of understanding the difference and even scaling in and how you guys could use this to set up for earnings. But right off the bat, this BYND play, we have those debit spreads. I'm probably going to look to cut those tomorrow so I could hold this longer. But remember, this one, like we said, $84. It's now worth $1,032. I talked about this one we did yesterday. Did the ghetto spread here. It's now down. So really, I only have, this is worth what? We're down $572. We're up $600 there. I only have like $350, $400 profit, which still isn't too bad. But again, we ghetto spread it early. It's kind of the same concept with the debit spread. But the key is now, this one's not in the money yet. But now, thankfully, BYND went up a lot after hours. So we're most likely going to be seeing a lot of potential gains on that tomorrow. But I like BYND in general. So I'm going to be watching that play, and this is the key now. I think a lot of other stocks could do what BYND did, and we'll talk about that when we see on what to watch here. But watch BYND for the rest of this day. Even this 130 contract is a great example, especially with the ones far at the money. They're going to get crazy. So again, if you want to take the risk, you want to go in and out, this is all you. I'm going to be looking for these. The key is going to be with the timing, because you could use the time to, it could either work against you or in your favor. But you'll see here, these contracts started in the morning at 50 cents, came up to $1.50, dropped, hung out here around 70 cents, then shot back up to 180, then dropped to 92, and then now they closed up here around $2 or $3. So again, this has to do with the stock. It's a bigger reflection of the stock. But that being said, there's going to be multiple times to get into BYND, and if you could really kind of time some of these and watch out for the frogs, it could be really good. But I don't think the BYND opportunity is going to be done, and what I'm waiting for now, I think either tomorrow or maybe Wednesday, it's going to keep shooting up, and then one of these days it's going to start, the rally's going to die off, the contracts are going to capitulate, And then coming into next week, that's going to be a great opportunity to get back in again. So even if you missed it this round, wait till the roller coaster comes back around and you could board back in. But let this IV and everything kind of flush out. But BYND was a very, very great play so far. And we even got in pretty late. We just waited till it confirmed, and we still got to get really, really effective cheap plays. There's that. And now the next play we made today, and the next one I'm going to watch is Roku. So they're kind of at an interesting spot. Again, they've been kind of downtrending. We've seen it. I'm afraid that this could kind of be a fake out here, and we might not get what we want. But considering how Tesla and BYND is, even like Crowd, I think we're going to start seeing some of these crazier rotations. So I decided to take the risk, and there was a trade out here. It was the Roku. Next week calls, the January 24th. I grabbed one of the 160s. So pretty far out for 32 cents. So now you could even see here, we could even come down to the 165, sell those for 31 or 32 and ghetto spread it, get all of our money back since I only spent $30 and have a $5 max reward. That's one thing we're going to be doing, and that's what I'm looking to do on this play. But here's the key. I picked far out the money because as Roku was going up, there was these 152 50s, and these were going for like 50 cents. They were even like 50 cents on the ask, and pretty much Roku was going up. The contracts were down 38%. And then Roku started moving up, and then these contracts were really underpriced, and then they kind of caught back up. I thought they were mispriced, and then they came back up. They shot up way faster, but then these 160s stayed the same. So I was going to spend 60, but what I decided to do instead, because I could have done a debit spread, but I didn't want to cap it because, again, there's time, and if it did one of these crazy breakouts that's unexpected, like Roku, like Tesla or BYND, I wanted to make sure there was upside with it. So I grabbed a little time, and that's why I said I'll go naked, but instead of chasing and paying $60, $70 for this one, I said, well, I'll just get a cheaper one that will benefit off the extrinsic value. And then from there, if Roku ends up actually failing this breakout or not doing what I'm expecting, I could go spend that other $30 and get one closer to the money and even average down with a better contract or get more time. So that's why I chose to go by itself versus doing the debit spread and even capping the gain to spend the same amount of money. It's a difficult choice to make, but you got to kind of find the balance. But that's what we did with Roku. And then finally, we did another Facebook play. So I like Facebook. I like tech. And again, I've been saying this all from last week. We hit that play last time. So I wanted a play that would cover earnings, even get a little time, but I didn't want to spend too much. So I got one really far at the money. I grabbed a 255 for February 20th for about $49. So it's at $60. It's like a nice 26% gain. They held up a decent amount. They already had a bigger gap up off the morning. So the contract was up overall 52%. But I like those in the same logic now. I like that they're $5 apart. So if it keeps going up or there's an earnings rush, this is allowing me now to scale in, and I could get a naked contract, still spend $50. Depending what happens in the next week or two for earnings, this will either stay up or down. It has time. And then I could move around the chain to position myself better. So that's, again, how I'm even going to go about some of these earnings plays. But those were all the plays we made today. As far as everything else, I'm going to be watching Shopify. We're still in those plays. That play is actually at 50%, I believe. They were up a lot more, and this was a volatile one, but they're only up like 20% now, but they were up like 50 or 60% in the morning. But I still like Shopify. Again, we have till the week after this on those, but it's still doing one of those breakout ones. I like Roku a little bit better because it hasn't done it, and Shopify kind of, it could kind of slow down, but I'm hoping it kind of does the Tesla. But watch them and then watch Amazon. I like them. Again, tech did very, very good today, but Amazon kind of lagged, but it's still like a pretty good gain. But considering how some of the other names have moved, Amazon is still lagging behind. So this is going to be interesting with earnings, but if it does start to kind of break off, and again, watch how Facebook and all those move, Amazon is going to be a good one. So all of our spreads are actually down. We could either average down on those, or we could kind of hold it out and see, but I'm going to keep my eye on Amazon still. Then watch JP Morgan tomorrow. They have earnings. They met the criteria. You could have played both ways for very cheap. They're really cheap in the morning, then they went up. But the key with JP Morgan, I don't really like the bank earnings. We were even talking about how, again, the market was showing it. The market makers were pricing in a bigger short-term move. They agreed $4, but anything above $4, the contracts were priced cheap for a reason. The market believed that JP Morgan wasn't going to move a lot. So our decision was, do we agree or disagree? In this case, I agreed with the market. That's why I chose not to play it. And by the time I said I saw them here, they were a good price. I waited till here, they went up. I was like, it's not really worth it. But that did remind me, maybe we could find some of these earnings plays, and we shouldn't sleep on the opportunity to even flip some of these into earnings, maybe get some free shares. But watch them tomorrow, because however they report and after the earnings, I think there could be a good follow-up play. In JP Morgan, the last 2 or 3 quarters, they've had great follow-up plays for earnings. So watch them, watch BYND, and then lastly, Tesla. They're going to be an interesting one. Again, I'm surprised they were doing this. We talked about it today. The market maker was pricing in a $50 move this morning, dropped to about $27. And again, they opened at $500 and moved $29. So the market is still pricing aggressively. And again, we have videos on pricing and all that, but it's essentially the price that the contracts are going for. But I still like them. I'm just going to play it the same way with Beyond. I'm going to wait till it kind of drops a little bit, see if we could get some frogs. But getting some of these time, even playing some of these just super cheap out the monies with this type of IV and craziness, you're benefiting just off of getting in there early sometimes. But again, watch out for this wicked game of musical chairs, because when the music stops, it'll go crazy. I said that with Beyond. You know, we bought those Beyond contracts for $20, and now they're going for $300. Don't get caught buying garbage where these were super far out of the money. Maybe they're close today, but if anything changes, they go up fast, they could come down fast. Just be careful and be smart and utilize, scaling in, debit spreads and all that. Besides that, watch the Starbucks. We still have those January plays that cover earnings. Those are up. Some people said they're up 70%, 80%. We could ghetto spread them, but the issue is there's no other contract below it. So you're going to have to wait a little bit till it becomes closer or they start moving up. But again, watch how their Starbucks is moving, even related to like McDonald's and all that. But I like Starbucks again. That could be a good sleeper, but we're still in that play. Then NOC, I really like, and this is what I was saying now, they've been going up despite the Iran concerns kind of slowing down, but they're creeping up little by little, but they're not moving as fast as the IV. So that's why they're decaying, and now they're really cheap. So we're still down on those Northrops that we got. But I'm even looking at some of these. You could play it by the week, or again, more time is still holding up, but essentially we could average down on these. And now if we got the 400s and they've dropped a lot in value, instead of buying the same contract, the best way to average down with some of these options, especially if they're shorter duration and further out the money, instead of buying the same contracts, decide the amount. If you spent 50 in the first place and you want to spend another 50, instead of buying the same contract that's already, lost probability and is further out the money, go a few strikes closer and get one there. So that's what I'm thinking about doing with NOC. So I'm going to keep my eye on there. Then watch UNH. And again, even Illumina as well reminded me of that, because today Illumina went crazy. We saw that on stream. They were speaking at a health conference, and there's a lot of health stuff, and even there's going to be a lot of drug reports coming around here in the first quarter, so watch out for that. But then UNH has earnings on Wednesday, I believe. So they dropped a lot. Some people said, could you set up now? You might be able to. And again, with this big drop, I want to see what the contracts do, because this might even offer an opportunity to buy the contracts and flip those into earnings. Then we got Snapchat. They hit 18 today. 1809 after hours. That's going to be crazy. We're still holding those longs, but I even said it. Snapchat has cheap contracts because it's so little price, but the key is now making sure we could get something cheap enough and close to the money, because even then, even if you spent like $40 for an at-the-money contract, the problem is, a 68-cent move, a 4% move is only 68 cents. So if you spent $40 for the contract and you get in the money and the stock only moves 40, 50, 60 cents, which is big for the stock, it's going to be hard to recoup that money. So the key with the Snapchat options is making sure you don't pay too much if you want to get them. But if anything, Snapchat, go long cold, baby. Oh, gotta love it. Gotta love it. And then check out HD. I like McDonald's and the other value momentum one, but I want to see what they do. They were interesting again. Just the premiums caught my attention last week, so that's why I want to kind of see how they level out here and what it does with, again, the overall market. If the market starts coming down or as the market hits even more highs, pay attention to those stocks. Then finally, for this last chart, I said, Qualcomm is going to be an interesting one to watch, even when you see it's daily here. If Qualcomm does break out from this 92, that could be huge. So again, remind me of this tomorrow. I could consider this. I just don't like how Qualcomm has kind of been moving, but if the volume starts picking up and things start looking good, Qualcomm could be a killer one. Remember, they had a good earnings when we hit that one. Oh, no, we hit this one. That was beautiful. But watch out. And then lastly, I was going to say BA. Boeing is at a very, very interesting spot here when we pull it up here. Pull a little bit closer. You can see it's kind of hovering around here, that 330, all the news. I like where that's at. Again, the question is, do we wait for confirmation or do you try to go early? I want to see, but again, with Boeing moves either up or down, this could be a good one. So don't miss out the opportunities. Don't get too bearish on it and don't get too bullish, but I kind of like the upside with it, but then it does look like it wants to break 330 and then come to a whole new level. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list below. Make sure we see you on the stream tomorrow morning. Keep it positive and respectful. You know what to do. Cole holding it down, baby. I want y'all to get ready for this earnings and everything else, man. We can hunt for the frogs. I need your head in the game. Use your experiences. We talked about that. And remember everything you've already gone through with every play, trade, every win, loss. Use the experience to your advantage, baby. It's free tuition. Some of you had to pay a lot. We all had to pay a lot. Let's go. Charge it to the game and get it, baby. But let's go.